We've got the management of CAMS joining in. Anuj Kumar is the managing director with us on the show. Good to have you on board because it has been a steady set of quarterly earnings overall. Your margins as well have risen to multi-quarter highs at 44%. What is the outlook for the next 3 to 4 quarters? Will this margin trajectory only build up from here on?
Good morning and thanks for having me on the show. So like I said, this was a steady growth quarter for us. Like you saw, revenues grew in excess of 13% year on year. PAT margin grew, PAT grew about 17%. Operating EBITDA, like you said, has been at a historic near best of 44% plus. The retail franchise in terms of participation of individuals and families in the mutual fund journey, I think has expanded quite a bit. Capital markets are experiencing retailization and we play in almost every segment of the Indian capital market. So we believe that holding margins 44-45% in that range will continue for the subsequent 2 to 3 quarters.
The base effect now would be a challenge because the penetration levels in DMAT and mutual funds, they are no longer minuscule. 10 crore DMAT accounts, 4 crore mutual fund portfolios. The SIP numbers now, I mean, they seem to be plateauing. Are we reaching a stage where margins will be intact, but your growth because the base will get challenged?
The first thing that you said is indeed right. The base has expanded quite a bit. I think the opportunity lies, and if you see the mutual fund markets, about 4 crore unique investors, I think gaining a serious share in those 4 crore wallets is perhaps the first priority of the industry because a lot of those people have tinkered with mutual fund investment but haven't given serious monies. And at 4 crore families or individuals, the headroom to rise and bring in more investors, I think, continues at a very steady state. So historically, you've seen AUMs grow about 18%. We believe that they will continue to grow mid-teens even in the coming years.
How does your business model evolve? I mean, as size increases, do you get benefits of leverage? Because your infrastructure, you don't have to spend a lot, but you will get a lot of benefits because you're, because you will add new clients. How does it work for you?
We typically grow with the markets and with our clients. And when we add new clients, obviously we gain scale, which is an important component of our growth. If you see in a typical quarter, we would take maybe about 60 to 70% of the incremental revenue to the bottom line because of the levels of automation, digitization, and straight-through processing that we've achieved. So to that extent, there is a component of leverage in the overall business, which will continue to show as revenue scale.
Anuj, since you did touch upon client addition, you added about 15 clients, as I understand, in this particular quarter. Any marquee names? And then what kind of client addition are you anticipating for the second half of the fiscal?
So in the last 12 months, if you take mutual funds, there was a queue of people who wanted to get in. We acquired amongst these, you saw Zerodha, you saw Helios, Angel Broking, and Taurus Oro. Those are the 4 new clients that we got amongst the new applicants. And then Navi was kind of an addition which migrated to us. The frenzy to join up in the mutual fund bandwagon has slowed a little, which means there are not so many new applicants now. So we believe we should have 1 or 2 other wins in the balance 6 months. The 15 that you referred to are clients in the alternative space, which is private equity funds, PMSs. We believe that that momentum will continue. We will continue adding 15 to 20 new clients on the alternative side every quarter.
An AI arm, so just give us a sense as to what kind of growth potential we can expect here and how are you looking to really leverage that opportunity?
So we've stated that we expect to be 15% earnings compounders. At a broad level, our MF business should continue growing early teens, 12 to 13% revenue every year. Non-MF, which you saw, grew 47% year on year, largely on the back of one acquisition, which is Think360. But on a steady base, non-MF grew about 30%. So we believe that revenue growth of about 15%, earnings growth in the same region or slightly better is quite possible in these markets, which is what we are aspiring to achieve.
How much market share do you have in this entire segment of registry plus mutual fund management? What's your market share?
Mutual fund market share of assets is in excess of 68, so it's holding at about 68.5. Alternatives of the outsourced part, we occupy about 50%. If you take the insurance repository market, we are at about 40%. So those are like three marquee businesses where we are holding share very well for the past several quarters and years.
About your biggest market share, which is 68%. Given that what we've heard from SEBI and what mutual funds in a sense are trying to do, they're simply trying to bring their costs down. The regulator has said the costs have to be go down, and mutual funds are telling us that it would be a function of registry charges, maintenance charges, and distribution cost. Do you think your business from mutual fund, while the business will be large, but the spreads will start narrowing down?
We believe, like I said, we believe we will hold margins. I think we made all the right investments in automation and technology. Our prices are telescopic, which means mutual funds in every subsequent year are buying it slightly cheaper. And if you see a 50 to 60 bips P&L that mutual funds run on, registry charges are typically about 3 bips out of that. So we are about 5% of the overall pie, a very small fraction. So while we continue giving some remission in prices, we believe, and that's continued for the last more than 10 years, it's more than a decade-old story. We believe we will hold margins or improve them slightly from here.
How is the business model structured? Do you get benefits? Do you make revenue stroke money only for maintaining demat accounts, or if the transaction value increases, you will also be getting benefits because of that? I'm just trying to understand here.
The essential fodder for the business is assets. Okay. Assets grow when net sales go up. Assets grow when mark-to-market gains happen. When you club these, that's the 18% annualized figure that you've seen in the last 10 years. We charge as a percentage of overall assets. So essentially, so long as assets continue growing either through sales or mark-to-market, that I think adds overall momentum to our revenues.
Say that CAMS is nothing else, but it's a bet on India's financial inclusion. As India will progress, they will have more demat accounts, more mutual fund accounts. The assets under management will increase. The size of demat accounts will also increase. So can I say that CAMS is nothing else, but it's a bet on India's financial inclusion growth?
That's exactly the position we've been holding. We are saying that we are a bet on overall capital markets and financial inclusion. And as retailization happens, like you've seen over the past 10 years, this trend will become deeper and deeper. So absolutely, you're spot on. That's really how we project ourselves and want to be looked at.
Almost a duopoly market, if I may say so. Only two large players. And that's where, when you are in such a good business, the disruption and the challenges, they come in. And given that what fintech is doing and what others are trying to do, is that a real risk that the monopoly which you enjoy, almost a duopoly what the sector currently seems to be enjoying, that will be threatened?
If you see, this business is very easy to get licensed in. It's an easy to get license, so not restricted by license. There were several players, over half a dozen till about 15 years back. A number of them fell off. When you see fintechs, they're trying to solve a single problem. They're solving an onboarding problem or a customer service problem or a payments and settlement problem. While our work spans the breadth of the markets, the liability side, operations work is all done by us. So we believe that it takes about 20 to 30 fintechs to come together to even think of executing the scope we execute. And therefore, the moats are large and it's not very easy to replicate this business.
Thank you for taking time out and joining in. So that's the management of CAMS talking about a 15% revenue growth, some headwinds for client additions in the next couple of quarters, but they have expanded the MF industry base as a whole.